Ian J Capital. Today's video will be about the price of oil. If you watch the news, follow financial markets, you're going to see headlines going around saying oil to $0. Price of oil goes negative. What does that mean? Does that mean you can go to the pump and say fill her up for free? No. I wish. The $0 they're referring to is the WTI May futures contracts. Now WTI is West Texas Intermediate. It's a benchmark to oversee oil as a whole. WTI and Brent are used to price oil, and it's seen as, the oil as a whole. If you want to look at the broad oil market, you look at those two. So they're important to the market. Just like the S&P 500 is a benchmark to the broad market. If you want to look at the market as a whole, you just look at S&P 500. If the market's up 10%, you're pretty much referring to, okay, one of the main benchmarks is up 10%. S&P 500, Dow, triple Qs, whatever. Number two, a futures contract. A futures contract is kind of like an option contract where you can buy or sell something at a certain price at a certain time in the future, and there's expiration dates or settlement dates. Now with futures contracts, there's two different ways of settlement. Number one, cash settlement, where they expire profitable and you make money, you're credited money, or they expire worthless, where you lose money. There's a second way in which it could be settled, and that's physical form. If you're trading something that has a physical settlement, you need to know that, because if it settles, you're going to be responsible for that physical delivery. And if we're talking about crude oil, if you bought 1,000 barrels of crude oil, you're going to be responsible for 1,000 barrels of crude oil. I'm talking about physical. You can touch them. Those barrels that you see on the crates, those are yours now. And you're going to be responsible for the delivery and the storage. So if you have nowhere to store them, you can't store them in your backyard, you're going to be in trouble. So if you're trading futures, always close them out before settlement date. Take your profits and get out. Now what happened with the WTI May futures was there was a lot of selling activity because of what's going on with the coronavirus. People are traveling less, people are driving less, so the demand has dropped pretty significantly. So what happens is they have so much oil backed up in their warehouses that they're literally paying people to take the oil off their hands. So that's how it goes negative. When everybody's selling contracts and nobody's buying the contracts, just like a stock, if you're selling Apple stock and nobody's looking to buy it, the price of Apple is going to go down. So same with contracts. If everybody's selling their May futures contracts for WTI and nobody's looking to buy it, the value of the contracts go down. And it went down so much that the suppliers will actually pay you to take the oil off their hands. The three things that caused this decline was, number one, the Saudi Arabia versus Russia oil price war. We talked about that a couple months ago. Saudi Arabia cut the value of oil. Number two, supply and demand. If nobody's traveling, nobody needs to buy oil that much. They're cutting costs. The demand's not there. It's oversupplied, which makes it less valuable. And people are selling their May contracts. They think they're worthless. And last, if everybody's selling their May contracts, they want to get out of that before it settles. They don't want to be responsible for all those barrels of oil. Can't just leave them at your mom's house. So you could think of futures contracts as like airline tickets. Right now they're dirt cheap. It's a pain just to go through the whole process of flying because you have to get screened. It takes you hours just to go through the process. And if you're flying from state to state, what's the point if everything's closed already? So people are flying less. So the airline knows that, and the tickets are really cheap. If you think in the future that the price of the tickets are going to go up, maybe it makes sense to buy December airline tickets and hope by December everything clears over and says, okay, everybody's back to traveling and the price of these tickets go up. And then you could sell those tickets to the next person and make a profit because you bought them when nobody wanted them. And now as the price starts to rise again, you say, okay, I don't need these tickets. My intentions were never to fly, just to sell these tickets as a gain. The outlook on oil, I'm not a financial advisor. The oil sector is important to the markets. I know the markets took a hit. I seen it. I don't know how long it's gonna last. Jay Powell and Trump is just pumping money. Who knows, man? You just gotta go with the flow. You look at the market like, why is this going up? It shouldn't be going up. Coronavirus still going on. The economy shut down. Why is the market going up? Don't fight the trend. Just go with the flow. If you're a short-term trader, be happy. Go with the flow. Trade the trend. Don't try to fight the trend, because you will get stopped out. E&J Capital.